We are live. Urgent trade alert, November 30th, 2022. Massive deflation wave incoming. Crypto, the long bond, and tech is where you get rich in 2023. Don't miss our next trade alert. Call Dean now at 505-322-7515 to upgrade. We're having record profits racking in. We just took a 68% profit betting that inflation would be the big theme of this year. Within RGU, that's the 10 large oil companies leveraged times 3. Our high risk portfolio is up 16.84% total return year to date. Last year, we pulled an amazing 233% total return. And for the month of October, our safe growth strategy is up 14%, and our safe growth strategy is up 31%. Sorry, our high risk return 14. Buy these 5 stocks now. Okay, so let's take a look at our current trading plan for clients. This is our high risk strategy. Every unit of investment costs $2,054. And what you're going to do is pick up 19 shares of UVXY, the crash insurance, 97 shares of TMF, that's 3 times Treasury, so the long bond. Betting interest rates are going to fall because there's deflation and not inflation coming in. We're going to go long ETHE, the Grayscale Trust, to give you exposure to Ethereum, a cryptocurrency. We're going to buy FNGU, the 3 times tech ETF. That's big players like Apple, Amazon, Google, and Tesla. And then we're going to hedge against the war in Ukraine by being long natural gas with ticker BOIL, 12 shares. Now, if you're a paid member, you can log in, type in how much money you want to invest, and the calculator automatically prints out how many shares to purchase. Now, again, here's the top headlines that shows deflation's coming in. First of all, ADP private payrolls, 127,000 this morning instead of 200,000 expected. This is a huge miss and means that the labor markets are cooling off. If we break it down, we're seeing all the high-paying jobs are falling off a cliff. 77,000 negative for professional services, financial activities down 34,000, information down 25,000. 100,000 manufacturing jobs gone. The only jobs getting added are waiters and bartenders, which added 224,000. David Rosenberg points out, from an income standpoint, the ADP report was bad. Job loss in high income areas, construction, IT services, financials, manufacturing, all showing the same thing about the economy, that it is slowing down. Meanwhile, the Chicago PMI was a huge miss. Last read at 45.2, expected to come in at 47, came in at 37.2. Also today, Powell came in saying we're going to slow down rate hikes. The pivot is coming in. You can see we are already in a recession. You want to buy towards the middle of it, and that's when you get the best returns in assets. Juliet DeClark says rule number 1 of investing, don't believe what the Fed tells you. Markets will move way before the Fed. We need to predict deflation's coming in and get ahead. Now, we're not expecting a collapse in the economy. We're looking at a soft landing, Goldilocks conditions. Amazon says Thanksgiving holiday shopping weekend was its biggest ever. The best credit environment in history. People not paying their loans is at an all-time low. Many of the headwinds of 2022 are going to turn into tailwinds in December of 23. So we're looking at inflation slowing down, the Russia-Ukraine war becoming status, crude going from 130 back towards 75, food price index set to decline, goods prices tanking, 10-year moving from 4.3 to 3.7. The Fed is set to become more predictable. The federal funds rate, 4.5% versus 3% inflation run rate. China possibly easing. CEO confidence bottoming. Expensive stocks are now derated. We're seeing the housing market cool off. Pending home sales still firmly in recession, negative 4.6 month over month. The number of job openings is finally starting to fall. So there's going to be less jobs relative to how many people are searching for jobs. Median wage growth, the main driver, finally starting to turn over. Here we can see housing prices falling. This rarely happens. This is looking at interest rates versus home prices, and you can see this is going to be a huge drag on home prices, likely pushing, again, inflation downward. Here's some of the hardest hit cities from Phoenix to Portland to Las Vegas. We're seeing a big crash in investor purchases. Meanwhile, if we go over to Europe, the German PPI index went from 8% positive to negative 4.2%, the biggest decline in Germany's history. European inflation is turning over on the CPI while core is topping out. If we look at PPI versus CPI, over in Europe, we can see that the PPI is falling and dragging that CPI down with it. Again, you want to get aggressive when inflation is peaking. In this chart, we can see inflation peaking in red, and in blue, you can see the stock market. And almost every single time, if you call the top in inflation and buy, you have great returns ahead. 1970, 1974, 1980, and 1990 all being prime examples. Now, the main way they've been fighting inflation is by slowing down M2 money supply. And so they did negative 3%. This is the first time in several decades the US has gone negative with its M2 money supply. They will not be able to keep that up. Expect the trend to go back to printing money to keep the financial system alive. This chart's looking at the inflation. You can see that the red led the inflation up, and now it's leading all the inflation down. We're seeing this work its way through the system. The big picture is that governments are going to keep printing money and borrowing more money so that they can spend more than they make. 10 years ago, we have grown globally about $120 trillion in debts. We're going to talk about what our favorite investment is when we look at the big picture in a moment. So again, don't miss out. Call Dean at 505-322-7515 to upgrade. Okay, this is where we think you're going to make the most money by far in the next 2.5 years, which is when I think we're going to top out in the bond market, tech, and cryptocurrencies. Buy 74 shares of ETHE, the Grayscale Trust for Ethereum, the ultimate growth product. It's down 59% this year because it hates when interest rates rise. Interest rates rise when inflation is rising. We now predict inflation has topped out. It's going to start to fall rapidly. This is going to be taking cryptocurrencies to much higher valuations. If we look at this chart and you bought Ethereum back in 2016 and you held it through all the highs and all the lows, even after that big crash today, you'd be up 93,175%. This is the single best investment you can make for your retirement right now. Now, the Grayscale Trust is actually down more than the real asset, down 75%. That's because there's a discount window that is probably going to be short-lived. This is a great time to stack ETHE. Now, remember, the US dollar will have an infinite supply because the government wants to spend more money than it makes. The voters ensure this continues to happen because they want free stuff from the government. Bitcoin and Ethereum have a limited supply. That's why they're going to go exponentially up in value as global governments print more and more money. And again, another look at global debt. It's just skyrocketing up. There's very, very few years where they reduce the debt. And when they do, shortly after, they ramp it right back up. In fact, here's the US federal budget deficit projection. The plan is to slowly ramp up the deficit to $2 trillion by 2023. That's all you need to know. Now let's take a look at some indicators that are telling us we're about to see a massive jump in cryptocurrencies. Now I'm talking most likely in December, January, February, March. With the TLT currently down 40% from its 2020 high, the potential for a sharp reversal is gaining momentum as inflation tops out and is likely to start falling rapidly by mid-2023. Okay, this was the maximum loss on the TLT. It's already starting the rebound that I was predicting. The most recent 14% gain in the TLT from April 2020 through December of 2021 led to extreme returns in cryptocurrencies. Here's the chart of the TLT going up 14% in this period. This sent Ethereum up 114% over the same period. There's the chart. It was a wild ride, but as long as you bought and held, you doubled your money in a very short period of time. Now, if you go to more aggressive cryptocurrencies, which we do for you at Rebel Dividends, only available to paid Portfolio Builder subscribers. This is designed to replace your ETHE position. We're going to get you into the software applications being designed on the Ethereum platform. The biggest market cap one that we're super bullish on is Polygon, ticker MATIC. It went up 525% over the same period. Very similar chart to Ethereum, but 5 times the return. Other coins we're invested in began their big moves ahead of the bond market rally, like Link, up 400% from the October 2020 to May of 2021 high. Aave went up 900%. Our whole Rebel Dividend strategy revolves around using the Aave lending platform. That's how we're able to take any dollar invested and give $2 to $2.50 of exposure to cryptocurrencies. And here's that beautiful return on Aave over this same period when the bond market started to heal. Curve has become one of the most powerful tools in DeFi, especially when all these different exchanges are attacking one another. It's probably the only crypto asset that's had exponential liquidity growth and user growth during this bear market. It returned 310%. I think it will blow that away in the next bull market. The potential for the TLT to make a move that is far greater than the recent 14% gain in 2020-21 is setting up and could drive a historic amount of capital and returns into cryptocurrencies in the next market cycle, which we expect to last until 2025. This is the market cycles of cryptocurrency, and it really lines up with the US Treasury bond market cycle. As long as bonds have topped out and inflation's about to fall, we have the perfect setup incoming. Now, this is where your video ends if you're not a paid member. This is only one position out of 5 in our portfolio strategy. So call Dean now so you can get the rest of the positions and the rest of this video. 505-322-7515.